Well, welcome back, everyone. It was an amazing day in markets today, right on point with the strategies you heard in videos just like these in the prior days. We've seen the S&P 500 as of the end of last week in that tumultuous fall of about 3.5%, NASDAQ falling about 4.5%. An oversold bounce kicked off from the short squeeze that took place in treasury markets and, of course, helped the equity market get off of lows that we saw on Friday. That followed through on Monday, and today our expectation was that we would end Monday somewhere close to the 63.50-ish area. We did get a little higher than that. However, our expectation was it would start to pull back in Tuesday's market or late Monday. And that's exactly what has played out. Where did we get that insight from, and how are we approaching the market from here? Well, if you take a look at the triple S indicator on a day-over-day basis, in the subchart, the triple S line has yet to depart from the fourth quadrant and move down. So we don't have a full-on negative momentum shift on a day-over-day basis, signifying a continuation of the move. But a daily chart looks out, signal-wise, a week plus, usually closer to 2 weeks. It could be a little longer than that. The 4-hour chart, which I'm now focused on, had a triple S sell signal on Thursday last week on the 10 a.m. Eastern Time 4-hourly bar. That down triangle is that triple S sell. The red line is the triple S line. It came from the uppermost quadrant, breaking down below the fast momentum line, which is the dash black line, and the slow momentum line, telling us that we are likely going to have a down spell that can last over the next 3 to 5 days. Well, we're in day 4 today, and did that down spell start again? It did indeed. The triple S line has come back down on that 4-hour chart below the bottom of the triple S channel. When we take a look at the hourly chart this morning, we started to see cracks in the armor earlier in the morning, but really the selling started at 10 a.m. Eastern Time onwards, triggered by the ISM non-manufacturing data. We got that down triangle, that triple S indicator, telling us that we are likely going to see hours 3 to 6 of potential downside action. Now, we were looking at this from the lens of the highest probability time frame for day traders using this tool, the 5-minute chart, and we were going back in time, sharing with members in the active trader room something that's really unique about the tool. The last time the slow momentum line arced and started to come down, that was at the all-time high point on the 31st of July. And you can see that that arc and the location of the blue line, very similar to where we entered the market this morning. We estimated the size of the pullback and, more importantly, that it would likely present in a similar manner, where the triple S line comes up, perforates above the top of the channel, above the slow momentum and fast momentum line, but doing so in that downward sloping channel and in the upper quadrant is a false breakout. And the indicator proved true out again. We saw price action come down, back test the fast momentum line, and before the market unclenched, Triple S gave us that signal that we are likely going to see some downside ensue. And indeed, right there at around 9:50 a.m. Eastern Time, we started to get our indications in play right ahead of that ISM non-manufacturing data. And of course, we then started to see the market unclench, making a move from roughly the 63.70 area all the way down into the 63 teens. Now, 55, 60-ish point move, an incredible trading moment where members in the active trader room got to see me trade shorts live on screen in my prop trading account successfully. Now, when we got down and got to that very oversold spot, the indicator started to tell us, watch your back. We're going to need a little breather here, a little break. We need to go gather some more bearish fuel before we can come back down again. And that's really been the story of the balance of the day. Is this market likely going to continue in that downward fashion? is the second leg of the big move down that we saw starting last week ahead of us in the days to come. Well, that and a lot more is going to be discussed live with you right on screen tomorrow morning in a very special class that I'm doing that starts at 10 a.m. Eastern Time. So tomorrow, Wednesday, August the 6th at 10 a.m. Eastern Time, I'll be taking you through a multi-time frame approach with high probability tools to provide you market signals down to individual security signals. And there's going to be lots of incredible announcements at that session. Looking very much forward to sharing stuff with you. And of course, looking forward to teaching you how I approach these markets in this volatile time in the dead of summer. It's a great time to be a trader, and it's extraordinarily important to have the right signals on your side, making better decisions for you. When you want to log in, simply go and do this in advance. I do it now. Get your seats so that you've got your login link and you're ready to go. Go to www.becomebettertrader.com/yes, or click the link in the email, and we'll see you at this very special class. It's a do not miss session. It is not a recorded session. So I'm taking time out of the active trader room and off of WealthCharts. I'm coming directly to you. Looking forward to seeing you all there, and looking forward to sharing a lot of great insight with you. Have a wonderful rest of your day, and thank you for watching.